Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Oh, geez, I don't have the music ready here. Let's do this. Okay. So, hey, new week. This is going to be the interesting week because I think at the beginning here is going to be probably pretty slow. My policy on daylight savings time is don't trade. I usually isn't a very good day for trading. But then we got CPI on Thursday. So then like the big decision point comes in. I actually have some hopes that the CPI will be in line or better. Overall, like the market seems really constructive. Like the risk sentiment overall we're seeing coming from other markets is pretty good. I think that China's still following zero COVID is like the big thing holding everything back. But when I come in here, things look pretty hopeful. So let's come in and look at some of the charts we got here. Show you where we're looking. So the treasuries are basically where they were. All right, we did get this jump here on Friday on the non-farms and everything, but it was basically unchanged on Friday, right? S&P 500, man. I mean, there was like a pretty big jump actually after the news, and then they slumped and then they came back up. It was just like all over, but here overnight on the up. So that's what we're saying. It seems quite constructive. Something similar overnight, oil was down and then came roaring back. I think that this is more like, is China going to abandon zero COVID or not? Like we keep getting rumors about it, and that seems to be what is moving them, right? Oh yes, hold on a second. Just noticed the spam account distracted me. Okay. Natural gas is significantly higher here. It went from 6.5 to 7 overnight. Wowzer. And then gold, kind of a similar thing here in gold. Like it was pressured early on and now it's bouncing. Right? Kappa coming off of a really, really positive day on Friday. Copper was like, wow. Wowzer on Friday. Then we've got the Bitcoins. Bitcoin having a little bit of a run on Friday, but coming back here, chilling out this morning. And the dollar index coming off of its elevated levels, pressuring 110 this morning. So the dollar coming back, that could help assets that we got here. So I'm not going to say that for sure I'm not going to take a trade, but I'm definitely pulling back on risk. We did take that loss on the FOMC day, so I'm still reeling from that. But I'm also this is kind of a time period where I don't find taking on a lot of risk works very well. So if we do take trades, they're probably going to be smaller ones, right? That's kind of where we're at. So let's just see how it goes. Again, daylight savings time kind of like screws everything up. So if I come over here to where do I have it? Every time zone. I love this thing. I have this lovely time zone converter. Okay. So when it is 9:30 my time, 9:30 a.m. my time, it's usually 4:30, right? Oh, but now that's in July. But now it is November 7th, right? So 9:30 my time, is actually, oh, it's 4:30 in London too. Okay. Wait, do they switch at the same time? I guess the exchange change time doesn't change. Oh, Lewis Hamilton won in Formula One this weekend. So I don't follow. Sim Sam says no. I did the same mistake. What's the difference? This is a little too distressing. That music. So then are they an hour back? Did they close at 12:30 Eastern time? What time Eastern time does the London Exchange close? Maybe somebody in Discord will help us. Anyways, so I don't follow Formula One enough to really know what's going on. But from the little bit that I pick up from, like, you know, podcast snippets on TikTok of Formula One nerds, it sounds like I'm supposed to dislike Lewis Hamilton. I don't know what the deal is. He seems like an okay guy. He's a good looking guy, I tell you that much. We in Central Europe changed the time 1 hour back. So you did that on Sunday as well. YouTube showed you that it was you were supposed to be an hour back? Oh, really? Oh, you're right, but it did. It said I was scheduled for November at 5:30. Oh, that's weird. I wonder why that happened. But yeah, some computer system didn't adjust correctly. See, last year the United States and Europe changed daylight savings time at different times, and it was like a month back. And so there was like this month where we were in this limbo area where it didn't fit. But you're saying that Europe switched over this weekend too, so that's good. You know what? I didn't even know this year. Oh, so I feel so behind, but I didn't realize it until I woke up and all of my clocks downstairs were wrong. Oh, they changed 1 or 2 weeks ago. Ooh, that's actually makes it more interesting. Now I'm thinking back at all of the moves that I've seen around 9:30 that were. Okie dokie. So we need to know when the London close happens, because that kind of affects a lot of order flow, right? Overall, I would say for the first like 30 minutes or so of trading, 20 minutes, I guess, they've traded a decent range here. There was that on the open? Yeah, on the open, pretty good impulse to the downside. But since then, we've kind of bouncing around here. So do we go higher? It seems like there are some participants in the market that really do think that interest rates should go higher, that they think that the terminal rate is 5.5 instead of 5. FX Macro tweets Chinese leaders considering steps towards reopening after nearly 3 years, with timeline stretching to sometime near the end of next year, says the Wall Street Journal. What? That does not sound like what people were hoping for, right? That is giving up on zero COVID, but not for another year. What? Oh man, Brannigan, an important thought experiment as we head into the key CPI print on Thursday. Which way is the current skew pointing? In other words, if there is a 0.1% beat or miss, which would have a bigger market impact and why? Let's answer Brannigan's question here. But first, I want to go to Forex Factory. I want to look at what the estimate was if it's changed. I have core at 0.5. Let's see here. I'm going to approach this one a little bit different. Ed says it needs more than one good report to have it. Okay. I haven't gotten anything more from that Chinese news there. I haven't seen anybody link the Wall Street Journal stories, so Let's see if Zero Hedge may be picking up on it. A hawkish pivot. You know what? I keep seeing people are pushing the, oh my gosh, the Federal Reserve just got so much more hawkish. I don't think so. So when I watched Chairman Powell's press conference, there was certainly some hawkish phrases in there, but I didn't hear him say anything that I wouldn't expect him to say. It sounded like he was saying the same stuff that he's always been saying. But the statement changed. It's like, imagine we're driving in a car, right? We're driving in a car. Chairman Powell is the driver, okay? And the equity market is in the back, constantly going, are we there yet? Are we there yet? Are we there yet? Or that's what's going on. And Powell's like, no, we're not there yet, right? But him and the co-pilot did just decide that they're slowing down. Like before, he had his foot on the accelerator, and now he's taking it back. We're decelerating, right? The pace of rate increases is likely to decrease from here, but he still hasn't decided where we're actually going to stop. He hasn't decided if it's going to be 5% or if it's going to be 5.5%. And so I think that Chairman Powell turning around and yelling at the kids in the back that no, we're not there yet, does not necessarily mean that he's going to go to 5.5. You get what I mean? You get what I mean? I think that whether we get to 5.5 or not depends very heavily on this next CPI that we get. I'm not making a prediction here, but I'm hopeful that we actually come in at 0.4 instead of 0.5. I think that it may actually be possible that we get 0.4. I mean, it's either it's going to be 0.4 or it's going to be 0.6 again. But if it's 0.4, and then I still wouldn't rest easy. We still need to see it come down in December too. But when I look at the economy itself, what's going on, all of the PMI numbers that we've been looking at are contraction, right? All of the manufacturing activity is showing that we're in contraction. Okay. Regular everyday Americans are pulling back very significantly on spending because like nobody can freaking afford this crap. And it's only going to get worse as things get cold, right? So it's going to be a brutal winter. I think that inflation is likely to moderate quite a bit through here. I mean, there's going to be knockoff effects, like the Federal Reserve can't rest easy, okay? But yeah, could they get rates follow their current trajectory and then keep rates there for a while? I think so. I mean, because at this point, I think the risk that they have to back off and or reverse a little bit is starting to raise. Right? So I'm still kind of looking back at that Federal Reserve meeting, and I think that all of the narratives that I'm hearing from people don't seem to match up with the press conference that I watched. So maybe I'm just crazy. Is there a good inverse? I'm sure that there is, but I don't really follow the ETFs, to be honest with you. You want to make money on the bonds coming back, eh? Just short search ultra short 20-year ETF or something. Okay, Alligator confirms in Europe daylight saving time ended a week ago. I don't trust those after XIV debacle. What? Were they involved in a bond ETF? What? I don't understand. What's the story there? Maybe I'm not sure what you're talking about. So that is XIV a ETF that went kablooey? We're chilling down here at the lows, but it seems pretty nonchalant about it. Okay, well, I mean, so here's what I think, Morgan. I think that if I wanted to make a trade on interest rates lowering from here, I would just pick up an overnight position in the micro treasury yields. You're right here at the beginning of the month. You could go short yields. I think it would be a good place. And you're even going to be making a little bit off of the basis difference. Okay, then go along. Sure, go along. I think, the micro treasury yield futures, when you think about it, I mean, it depends on how much money you want to put at risk here, right? But let's say that you're willing to make or lose $1,000 on this trade, right? That would mean that the treasury would have to gain or lose a whole percentage point, 1,000, right? So yeah, doing it with the micro yields is actually practical, right? Now, the only thing is that you would have to close it and then reopen in the new maturity every month. There are some costs associated with it and everything. But I personally would be... Short yields would be TLT. Yes, you're right. It would be. See what you're saying. Well, I'm sure that there is an ETF out there for that, but I don't know, man. If I'm trying to make that trade, I'm thinking, no, I'll just do it myself. You know what I mean? Well, they don't seem too interested in moving down per se. I don't think that makes it a good long here, but they're just super chill here. I am gonna reset my my current trades columns here, just so we can kind of get a better idea of how far it comes back. Yeah, it's just the way it is. I think the thing is you might be able to get I don't know. The problem is that all of the instruments have very much been in, go long, right? Like equities, it's the same but different in equities and treasuries. They behave differently when they're moving up compared to when they're moving down. When as treasuries, especially when treasuries move down, it's much more likely to be a buyer strike kind of a move. Now, a lot of these moves down that we've had in the treasuries were actually accompanied by very, very heavy selling. Okay, so you've seen a lot more of that this time around. I think that had a lot more to do with what was going on with the UK pension funds, right? But what happens a lot in these sorts of things is like when bonds are falling, like nobody really just wants to touch it. I don't know if there is actually that many institutional players and hedgers and stuff that actually ever like to go short the treasuries, unless they're doing a basis trade, right? So a short bond ETF is probably less common and harder to find, but I'm sure that it exists. It almost certainly exists. It's just like, man, that fund, you imagine the fund that's doing that, it'd be like terrible losses for like 10 years in a row, and then this one year, just, they smack it out of the park. That's right. That's a hard one to put on, though. And honestly, that's the other side of it, is that the time horizon of your trade matters a lot, right? Because especially those leveraged ETFs kind of lose value over time. TMV is an inverse 20-year. Okay. But a lot of these, they lose value over time. Like, you don't like, they can be good day trade instruments, but you don't necessarily want to stay in them for like years at a time. Some of the funds are like that, so you got to be careful about that, because anything that's like leveraged or using the derivatives and stuff could show a decay. Morning, Val. How are you? Welcome back. What? Yeah, it is election week. That's, I didn't even... I mean, I know that it's an election tomorrow, but I just haven't thought about it a whole lot. I just know I'm not going to vote for Evan McMullen. That's it. That's all I care about. It's probably going to be close. Do we have... Wait, let's come in here. realclearpolitics.com. Oh, I don't know if there's really very good trading opportunities off of it. I mean, I think that in a situation like this, there's always going to be a bunch of speculators out there looking to try and make it a thing. But I'd be careful. I think that, maybe, well, if Democrats did better than expected, that could be a surprise to markets, and then maybe there'd be trade. But I think that the market overall already expects that oh my gosh, it shifted on me there. I think that the market expects the Republicans to clean house. You went wrong, and I think if I show you some data, well, so I think that probably the trade is long equities, right? So the market likes uncertainty, or not uncertainty. The market likes a divided government. The market likes it when nothing can change, and it's just like all the time. Republicans come in and pass a bunch of stuff, and Biden vetoes it, and nothing gets accomplished for 2 years. The market actually kind of likes that. So, oh, it doesn't even show. Okay, here we go. Lee Wilson versus McMullen. Oh, wow. Okay, so there was some people online. Here's the thing is, I was like, I'm pretty sure they were ahead, but I did see a bunch of them where Lee was only up by a little bit. But Emerson did a poll, is the most recent poll, shows that Lee is ahead by 10 points. No, it's not gonna happen. It's not gonna happen. I think so here's I think this is maybe more of a personal opinion, okay? Because to be honest, they're not going to do it, okay? And even if they did it, they wouldn't be very successful, okay? So that point doesn't matter. So I guess that means that I get to interject my own personal opinion in there, okay? The Democrats impeached Donald Trump twice over pretty I don't think that they had a very good case for impeachment, okay? I think with the way that went out, I think that the Alan Dershowitz made a very compelling case. I think that the bar to impeach a president should be really high. And I think that Democrats really harmed our democracy and our government by pushing for impeachment so hard. and then failing twice, right? So it really kind of it kind of moved the Overton window. It's like the talk about impeachment is like now it's like way too easy to talk about impeachment. And Joe Biden has certainly done a number of things that I think the Republicans could justify trying to impeach him over it, right? For instance, the whole mess between Saudi Arabia and the United States and Biden trying to pressure them into holding off on OPEC or, supply decreases until after the election, right? That's a quid quo pro. That's exactly what they accused Donald Trump of doing. Except for the difference was that when it was Donald Trump, Ukraine was like, oh, we didn't feel any pressure, and Ukraine was all totally chill about it, although maybe, taking sides for political reasons. And meanwhile, the Saudis are like, yeah, no, he tried to pressure us and we're pissed about it, right? So from that perspective, it's like the same situation. it's like the same kind of situation. You could totally impeach him based on the standard that the Democrats set, I feel. But would it actually be a productive use of our time? I don't think it would be. I think that we need to get back to, okay, if you're going to impeach somebody, it needs to mean that they did something really, really bad that very clearly everybody can agree justifies them being removed from office. I really think that we need to keep that bar high, because what I don't want to see is every president gets impeached. I think that would just be silly. And that's kind of the direction it's going. And I feel like that if the Republicans took that route, that's the way that it would go. Is he unfit? Can we do the Fifth Amendment sort of thing on him? Well, that his cabinet would have to say that he's unfit, right? So that's unlikely to happen. But here's what Republicans should do. They should propose legislation that imposes a mental fitness requirement for office. They totally should do it. I think that would be, oh man, I bet you they do it. I'm thinking about it. I bet you they do it. There'd be some, but there's kind of all these questions around how should it be done? How should it be done? What would be the mental acuity test that you have to pass, right? And they'd say that all congressmen and presidents and Supreme Court justices would have to pass this test in order to remain in office. Otherwise, they'd be forced to retire, right? This would be so devastatingly effective against the Democrats because what's going to happen, right? They're going to say, well, you're going to have to pass this test, and then what's going to happen? Joe Biden's going to have to veto it, and the Democrats are all going to have to vote against it, right? So we're going to be like, the Democrats. And then the other thing is that this is a sort of a thing that I think that Democrats would be all over. Democrats would be prone to liking that sort of legislation, so it would hurt them doubly. Oh, that would be clever. I hope they do it. Whatever test they chose, I think we all know what would happen. Well, the problem that you have here with this, oh my gosh, this is one of my favorite subjects. You've come into one of my favorite subjects in government, okay? It really bothers me that there are so many people in Congress right now that seem to be completely clueless about like some basic economics. Like the Democrats have basically become inflation deniers. It's like, I think that's one of the reasons why they're hurting in the polls so much, is because they basically became inflation deniers. They either said, no, there's not actually inflation, or it's transitory. It was either that, or they said, well, it's the fault of companies. The only reason it's happening is because companies are price gouging us. I just sit and think about this for a second. Like, under what circumstance would it not be? I mean, companies raise prices to make money, right? The reason inflation happens is because somebody somewhere realizes that there's so much money in the area that they can raise their prices and make more. That's really all it comes down to. How do you stop that? You're going to impose price controls? Like, when you really follow their argument, what are they really saying? Oh, well, if we lived in a communist economy, inflation wouldn't be a problem. Well, okay, that's what the Russians thought too. All right. Okay, so how do you ensure that congressmen that get elected to office understand basic economics? Well, the obvious answer would be that you have a test. You have a test, and they have to know all of these things about inflation and how those work in order to get into office. I think it would be a test kind of like I'm taking Series 65, which is an investment advisor. I think it would need to be a slightly different test because it would need to have a lot more stuff about like the dynamics of inflation and all of this kind of economic stuff, and like the or for instance taxes, how different types of taxes have tended to affect the economy and like what the research is on that. Okay, but like this is where you start to get into problems. Okay, because there's disputes about the research. Doulos there, by the way. There's disputes about this research. For instance, research shows, generally speaking, that a more progressive tax increases GDP growth. I'm not switching. I mean, maybe I do. Series 65 is the test that you need to take to become a investment advisor. And the thing that initially drew me to taking this test was that there was a note that they had put out, or a change in policy, that people that work for an investment advisor or that have a series, have a Series 65 certification, whatever the deal is, can participate in hedge funds without having the $1.1 million net worth excluding their primary residence. That's the rule, is to participate in basically what are hedge funds. They're like, what is it called, the 501c7 investment funds, whatever. You have to have a net worth of $1 million excluding your house. Okay, so that was what kind of initially drew me to it, and I like purchased all of this stuff and everything. And also was like, well, I want to get a Series 3, but the cost for the Series 65 is less than the Series 3. That must mean that there is less materials. So let's do the Series 65 first as kind of like a test run to see what doing these tests and everything is like. Yeah, like being able to invest your funds in them. Yeah. So I later found out that it probably doesn't matter because most funds have a minimum investment amount anyways. And the minimum investment amount is going to be like you have to put millions of dollars with them, because the economics of it all basically means that unless you're getting like a few $1,000,000 from somebody, that it doesn't really make much sense. And there's a lot of funds that are really only like a few millionaires put their money into it, and that's how it started, This is kind of how it happened with the flash crash trader, right? Was he invested all of his money that he had made into what were essentially hedge funds, and the people that he invested it in basically lost all of it. I thought you had to have a sponsor to take the various series tests. Okay, so most of the tests you do. So if I wanted to take a Series 7 exam, I would need a sponsor, but not for the Series 65. Because the Series 65 is basically like you can go and take that test and then start your own investment advisor company. You file the documents with the state. I mean, you have to like incorporate or it's not like you have to incorporate. It depends on the state, but you do have to like file. You have to create the business organization, and you have to register with the administrator and all of this stuff. But then you can start your own investment advisor. And a lack of experience can specifically not be held against you in terms of like approving you. So I don't know if that means I start my own investment advisor company. I think maybe I need to, but here's my plan. I need to take the tests. I need to keep taking the tests. So there's 8 practice tests. I've taken all of them. I passed it like 50% of the time. So like I'm right on, give or take a question or two, like every time. I think that some of the questions are a little bit like intentionally too hard. And so I hope that their tests are harder than the actual test. But what they tell you to do is take a green light exam and then take all of those tests again. So I'm actually only to the halfway point on taking the tests. But taking the tests the second time will be faster because I remember the questions. Like, I really remember the questions. So, does 65 teach you equity analysis on individual stocks? It does go through a little bit of that, yes. I think that the level of analysis that it's talking about is stuff that I already knew about. Like it's talking you have to know everything about what's on the balance sheet, for instance, and like what are the certain ratios. Like there's the quick acid test, and then there's one that's like assets minus liabilities. Then there's also the one that's like assets minus inventories over liabilities, and they talk about all of those. Yeah, current ratio. It goes into that, but I know that there's a level far beyond that, right? Where you say, okay, this company is this type of a company, and here is kind of a model that I use to try and model what this kind of a company is worth, and it doesn't take it that deep. I think the thing is that like really it's a much higher level sort of a thing that you're usually doing with investment advisor anyways, right? Like I think that if I started my own investment advisor company, probably what I'm doing is I'm talking to people who are like in their 50s, right? And helping them plan better for their retirement. A lot of investment advisors, there's a lot of investment advising that goes on out there that is not, necessary. I had a friend, she's I knew her from weightlifting, okay? And she's always been like a self-made entrepreneurial type. So she's been, and she never got married or had kids or anything like that. So she's just loaded. She travels around the world, all this sort of stuff, right? And she paid an investment advisor, and he like totally blew it. He totally screwed up. He had her in like investments that made absolutely no sense. And then he made all these mistakes, like she was contributing to her 401k, but it wasn't like being invested into anything. Like she had made a lot of dumb mistakes like that. And so she started teaching stuff, like just basic investment stuff. So like, yeah. And she's like super anti-investment advisor because, she paid one and she didn't get anything for it, right? But when you get into like your 50s and you actually have like a big wad of cash saved up that you have to manage, like it actually does matter, okay? It matters a lot, okay? Like my parents, their investment advisors, basically since 2020, basically moved them out of everything and into like annuities and things like that, and preserved all of their wealth. So this huge 20% decline that we've been seeing, or 50% decline, depend if you're on small cap stocks, right? They didn't experience any of that at all because their investment advisor is just like, and they're super active. Like they say, okay, we're going to tactically move over here to this and this. I don't know how they do it, but they're freaking geniuses, man. They're freaking geniuses. They're really good. Having a good investment advisor matters, and my parents are going to have a pretty nice retirement because of their investment advisor, right? So it matters. So I would think that if I'm doing active investment advising activity, that it would probably be with like, people in their 50s. But there's also like advising pension funds and these sorts of things. And I'm kind of an expert in treasuries already, so I could go deeper down that. But like, that's the problem, is that I don't really I just took the test. I don't really know what I'm doing. So I have a plan. Here's my plan. I'm going to take the test. I'm going to pass the test. And then I'm going to find local investment advisors. And I'm going to say, hey, I just took this test. I don't really know what I'm doing. I'm not looking for a job necessarily because I do have a 6-figure job in tech. I mean, so if you want to hire me, you'd have to pay me more than that. But I'm thinking maybe I do this as a side thing. I don't know. And I'm wondering if I could interview you guys and get some ideas and tips on career advice and stuff. So I'm starting to try and build that network so that when I pass it, who knows what we do with it. I could start an investment advisor thing, register as a federal covered advisor, and give advice online. That's the thing that you can do. Although I don't know who's actually doing that, but I digress. Leave a like, guys. Thank you, Kyle. I always forget to talk. We used to be so good at that. We'd always get 16 likes like every stream, and the stream did do a lot better when people liked it. And then we kind of were like, oh, it doesn't matter, and we forgot about it, and then the stream didn't do as well. Is that what it is? Is that why the stream has been performing a little bit less well over the last, let's say, since the beginning of the summer? Is because you guys stopped liking it? Let's see. Well, there you go. I can see the likes going up. Thank you guys very much. Did Liguard? I did not see anything about Liguard. Okay, Trading Floor Audio tweets. Goldman Sachs says there's still a very plausible path to avoid a U.S. recession. Reports Bloomberg. Goldman Sachs top economist, so Jan, says there's still a very plausible path for the economy to avoid a recession despite the Federal Reserve's aggressive tightening of interest rates and geopolitical uncertainties. The bank maintained a 35% probability that the world's largest economy will enter a downturn in the next 12 months, well below Wall Street's consensus. Wow. The steps towards avoiding a recession include a moderation in economic activity and a slowdown in nominal wage growth, as well as easing of inflation and rebalancing of the labor market. The transition to below trend but still positive growth has already occurred, and it looks durable, Dan Hatzius, Goldman Sachs chief economist, wrote. The views were an outlier. I won't read this whole story because you guys aren't subscribed, but that seems like a good story. Oh yes, okay. So we still got about 10 minutes before the S&P 500 opens up. Oh, what is this? Biden tweeted something. I'll do what it takes to bring inflation down, but I won't accept the Republican argument that too many Americans have found good jobs and have more. That is not the Republicans' argument. That is not the Republicans' argument. Or that our largest, most profitable corporations shouldn't have to pay their fair share. Probably because people got blown out of there. I'm just scrolling back here, make sure I didn't miss anything. Uh-oh. No. Yeah, it's daylight savings time. That's funny. Yeah, so in case you missed the beginning of the stream, today is the first day trading in the US with daylight savings time intact. Apparently, Europe shifted over a week or two ago, so everybody is now on daylight savings time. But my general observation has been that first Monday after daylight savings time is usually not the best trading activity. And we are usually not our best selves. So that is why I'm pretty hands off. It's not like I can't take a trade. If something happens, I'm going to take a trade. But I'm going to be much more risk adverse here. It'll be a small one, you know. I'm not going to be looking out here for home runs, 50 plus ticks, right? Forex Live asks, can the midterm bid in stock survive tax loss selling season? Actually, I think it probably could. I tell you what, I would hope that if you had a loss that you wanted to take this year for your taxes, that you already took it. Right? Could be wrong. Maybe it gets worse, but... Sounds like there's a thing going on between Sam Bankman-Fried and some other stuff. I keep seeing Bitfinex tweet about this stuff. It sounds like there's some concerns that there is an underlying problem out there in the cryptocurrency ecosystem that is kind of being kept under wraps. I'm starting to get that hint. Larry H. Summers, the major short-term impact of the election is likely through the upcoming debt limit issues. My fervent hope is that those candidates who advocate taking the credit of the U.S. hostage lose, and America can at least come together on the idea that we are responsible for our debts. I agree. He's right. I think it's okay to have negotiations around it, per se, but it's not okay if we actually default. Okay. John Ralston, my predictions are out. Senator Cortez Masto hangs on. And Lombardo NV wins a squeaker, and the Dems retain 2 of 3 House seats. But what do I know? Sounds like... and then election recon says our model has NV Senate as tilts R. That's going to be a close one, is Nevada, isn't it? Anyways, so we were talking about investment advisor. I actually had sent out some stuff on LinkedIn yesterday. Ooh. Oh, yes, I think I already got that one. Financial engineering workshop. This is pertinent to my interests. Nope, doesn't look like anything interesting over here. It's too early. It's too early. Oh yes, this is Wednesday. on Wednesday. Here, I'll give you the link. If you guys are interested in financial engineering, this guy is doing a workshop on interest rates on Wednesday. Love me some acid music. Man, Treasury has been hanging out at 28.5 here now for feels like forever. Yeah, okay, so one of the things we noted here at the beginning was that natural gas futures jumped like $0.50. So now Zero Hedge has a story about this. Shall we read it? U.S. natural gas futures bottom on October 24th after a 50% haircut on warmer weather. In the last 2 weeks, prices have staged a rally on the prospect of cold weather and tighter supplies. Last Monday, we penned a note titled, U.S. natural gas spikes as temperatures are about to dive nationwide. Now, with colder weather sweeping across the U.S., natural gas prices are up a staggering 49% in 11 sessions. Ow, wow. On Monday morning alone, natural gas futures were up 10%. Bloomberg said the move higher is weather-related as a winter storm hits the Pacific Northwest and frigid weather is expected across most of the country. National Oceanic Atmospheric Administration released a 6 to 10-day temperature outlook for the lower 48 states, showing that most of the country will experience below-average temperatures. A 6 to 10-day outlook. Yes, it does. That looks like it's going to be super cold. After an unseasonably warm end of October and first week of November, the warm spell is forecasted to turn today. Average temperatures are expected around 48 degrees Fahrenheit and will revert to a downward sloping 30-year mean of mid-40s by mid-month. Colder weather indicates heating demand will rise, and so will the demand for natural gas. The latest rally in natural gas outlines how sensitive traders are to potential cold snaps, as below normal stockpiles and surging exports could strain domestic stockpiles in a deep freeze in the months ahead. So, the winter of difficulty is on. Treasuries are moving up here. I suppose if we wanted to go for a breakout, this could break out. I don't know. I kind of like it for some reason. This is exactly where it would like head fake and turn back down though, isn't it? I guess that means that I'm not going to take a trade and it's going to go up and we're going to regret not taking it. Yeah, you know what? I was seeing a couple of people on LinkedIn saying this. It feels to me like if you're a professional, that LinkedIn is the place. Like let's say that Twitter collapses. Where are we going to go to get our news? LinkedIn, that's where we're going to go. That's where all the day traders are going to go, is LinkedIn. Oh, I thought this was Cat Turd was tweeting something. I was like, oh, something new here. But no, this is a story from yesterday about Facebook is probably going to lay off thousands of people this week. And meanwhile, by the way, like they let a bunch of people go on Twitter, but apparently a bunch of people were let go by mistake. And then there was some other people that they actually decided later, oh, actually, we need those people. And so they're asking these people to come back. Do you believe that? Man. And I'm sure that a couple of them are going to be like, no thanks. I do think it would be interesting though, like, Who's laying people off? It's big tech. Maybe it seems to me that too much money in this economy have gone into the big tech companies, and that they need to go through a time period where money is tighter and they're more efficient and they get a better return on people's money. And I wonder if that means that more money can go to other sectors of other sectors of the economy, and maybe even less big techs. Just small companies that have tech but aren't like big tech, maybe. Because when I look at the things, it seems like nobody makes enough money, or it seems like everybody complains about not making enough money, and like young people cannot afford to have a home or anything. But then I look at all of the people that are working tech in California, and it's like these people are freaking swimming in it. And it might be difficult for the cost of living over there, but then if they switch around, they can buy like a $2 million home here in Utah, and it's like just ridiculous, right? So maybe we could spread the wealth a little bit there on that. You think that Twitter will be the best in time? Let's see. I do think when I've all of the other competitors, okay, because the reality of this whole thing has been that like people have been mad about Twitter for a long time, and conservatives had worked many times to create alternatives to it, right? There was Gab, there's a bunch of them, and then Donald Trump made Truth Social, right? But every time that I come across these and I look at who's involved in them and everything, and I say, these, what makes you think that you can run a tech company? Okay. Well, Elon Musk has run a tech company. Elon Musk knows what he's doing, right? And when I look at the moves that he's making and the feature changes that he's talking about, I'm like, okay, yeah, I'm on board. Like the Twitter verification thing. Everybody's pissed about the Twitter verification thing, but I'm happy because like, isn't that the way that it was supposed to be in the first place? Was that anybody could get verified, and it just meant that you were verified and not a bot? And then it became something more because it was too difficult to verify everybody. That was so dumb. They totally, I really like Elon's plan. Okay, we did get the breakout, so there you go. There was $10. Should have taken it. I think they could get even more. I think we could get another 10. I think it could take 15 to 14. It's still a little, and the S&P 500 here starting out is pretty tight too. So I have high hopes for Twitter, but I'm just saying, in the event, because I think the problem here is, I like a lot of the things that he's doing, but I also think that the deck is kind of stacked against Elon. Like, he had to take on debt to get the company. The company was unprofitable anyways. There's going to be a lot of people that are going to be kind of mad about it. And there's a lot of people that just don't believe in the real vision. So like, I saw this TikTok yesterday, Hank Green, he's probably like the most popular person on TikTok. And I don't mean that is like he has the most followers or anything. That is, I mean, like, he's universally loved, and he's a smart guy. And he got in an argument with Elon yesterday, and Elon's responses didn't really make much sense. Of course, I don't think that Hank Green understood that, like, Elon's take is that you should be able to say whatever you want and let the market figure out what's true or not, but he was like, Elon responded back, do a Google search. And I'm like, you know who you're talking to? Like, this guy definitely knows how to search Google. Like, and it was a really weird interaction, right? And the way that Hank Green presented it, it was like, yeah, it seemed like a really weird interaction, right? And I see that happening all over the place. Like, I think that deck is stacked against Ilana. He could come in and do a just absolute phenomenal job with Twitter and still fail, essentially. So we'll see. Musk warns Twitter will permanently ban impersonators after he gets parodied by verified users. Yeah. So does that mean that I can become a verified user now? Because I wouldn't mind being. I always wanted the blue check. Okay. I feel left out, and now is my chance, right? To get it, you know, to get the check. What do you do? So is it maybe under settings, Twitter Blue? Super follows. Okay, let's try this again. Settings. Your account. Account information. Oh, verified. Learn more. Oh, you can't do it that way. So, people doing it must have been people that were already verified. Must not have changed it yet. Well, that open for the S&P 500 is starting to turn into one big ugly down candle. By the way, I don't know why this reminds me, but I'm not putting a video out today. I did record a video this weekend and did a lot of work on it, but I got to the end and I realized that there was a lot of extra fancy editing that I wanted to do on it that was going to take some time. So I'll release it next week. What says Bitfinex within the next 24 to 48 hours, Sam Bankman is going to say something like this, and then he has an image. What is this image of? Bitfinex introduced fiat operations in 2015 to act as there have been blah blah blah. In light of further rumors, we'd like to take this chance to address a few allegations. Bitfinex is not insolvent, etc., etc., etc. So he thinks that Sam Bankman is not solvent. Yeah, there's a video on the jigsaw settings and why I have my workspace set up the way that I do. And then probably have to do double duty this weekend because I want to do a video on the top NinjaTrader 8 tips. Well, I tell you what, that was a great breakout, but it's come all the way back and you're at 4.16 again. Anyways, for you guys that are here on the stream, I've gone through settings a bunch of different times, right? So, but yeah, I was like, well, okay, when I say this one right here, I want to be able to highlight it and zoom in on it and all that stuff. So that'll take me a little bit of time to figure out. This is kind of cool. This song. Oh. I'm gonna like it. It makes me feel kind of like hyphy. You know what I mean? You know, it's like hype, but like gangster hype. That's hyphy. Love that stuff. All of the like when you, in the rave scene, like all of the really big rave bangers of the past decade or so have all been kind of hyphy. Like Animals, it's kind of got a hyphy feel to it. It's like, oh yeah, that's right, we're animals. What's this? See, here's my problem with music. I like something a little. I like something with attitude, you know. Like it's got that edge, you know. Got that hard left edge or whatever you want to call it, or is it the right edge? I don't know which edge it is, but it's an edge, you know. It's edgy music. I like it, but that's not the way. You know, not everybody likes that. Men like that. Women tend not to like that. So the most popular music does not have the edge. Oh my gosh, this is funny. Glenn Greenwald is retweeting somebody that says, you should be able to vote Democrat, but check a box that says you think they're doing a really bad job. And Glenn says, this is what mainstream left media is for on YouTube, Twitch, etc. It ensures pseudo-radicals keep voting for Democrat Party politicians over and over without exception, all while letting them tell themselves their steadfast partisan loyalty is reluctant, resistant, and edgy. That's 100% what it is. That's 100% what it is. Why? Let me tell you something. Our political system has been screwed up by social media. I'm dead serious. I don't think I'm saying anything too controversial. Okay, but the internet kind of screwed up politics. Okay, before the internet, you could get together and you could say, "Hey, we need to do this law. I know that we disagree on it a lot, so we're going to somehow compromise until we find a bill that everybody can vote on and accept. Because it's better that we make a bill that has a compromise rather than not do anything." Okay, and then 2006 came along. Was 2006 because they wanted to do that on amnesty and the Republicans flipped out, right? And then Obamacare came on and everybody flipped out about Obamacare. And when Obamacare happened, because here was the thing, everybody was talking about it online. It was like play by play. We were all reading the play by play about what was going to pass and everything. And then everybody was kind of upset with the end law. And then Republicans came around and like voted out everybody because of it. Right. And that was the thing that kind of set the stage to, you have to be really, really careful as a representative now, because every little thing that you do gets reported on the internet, and even a small infraction can result in you being ousted. Right. And that kind of ended up being a problem. Because now politicians can't compromise. They can't come in and say, okay, well, I really know this issue and this is the right thing that we can do. You can't do that if your base says that's not what they want. And you could be like, well, I know better than them. But if you take that road, you're probably going to get voted out of office again, you know? You should really have if the so this is here's the thing is that the thinking is that if you had multiple rounds of voting and yada yada yada, that a third party would be viable in the United States, and that the solution to the problem is a third party. Okay, it's not the solution. Like, the reason that the United States, if we look at the United States compared to other Western democracies, okay, the UK, France, Germany, etc., okay, why did the United States go the direction that they did and Europe go the direction that they did? And of course, there's been a lot of historical differences and cultural differences, but you know, in the 90s, we weren't so far apart, right? And since the 90s, we've kind of drifted pretty far, right? And I would argue that it's been very much to America's benefit. America is still quite strong in the world, relatively speaking, and the European powers are looking a little bit weaker at the moment. Okay, part of that is because they've got the problems in their backyard, but I digress. Why did the United States do what they did and Europe did what they did? I think that it largely has to do with the parliamentary system. Okay, there are a lot of problems with the parliamentary system, and there's a lot of problems with, like, when you have a trillion different political parties constantly coming up and going away and all of that sort of a thing. So having two parties that are really, really well established and have really, really solid organization and always will is a really big benefit. And having them very close and, you know, the country constantly swinging between the two of them, it's actually been a very positive thing for the United States. And when I look back at the history, time and time again, it's been kind of the slightly more conservative approach that is kind of ingrained into the way that the US government is set up. Like, the Senate has always kind of been the conservative holdback, right? That certain things took longer to get implemented than normal because of the approach that the Senate takes. And those people that are in the Senate, they've often been in office for a very, very long time. So they know their stuff by that point. I think that there's real benefits to it. Okay. So I don't think that the problem is that you need a third party. Okay. The problem is, number one, you need representatives to be able to do the right thing and stay in office. Okay. That's your first problem, right? Your second problem is that you need the politicians to actually get good information, because I don't think that they are in many cases. That the information that they're getting is only the information provided to them by corporate lobbyists, right? And the way that fundraising is, I really thought that more free for all in political fundraising would be a good thing, because it would mean that everybody would have the opportunity to speak. And in that respect, I think it's true. If you go back and you look at the primary campaigns for both the Republicans and Democrats last time around, I feel like that everybody got their chance in the spotlight. You know, Ron Paul got his chance. There was, even some of the crazy ladies. What was that crazy lady at the Democrat Party? Oh man, she was hilarious, man. But even she had her moment, okay? So in that respect, it did happen. But what was the unfortunate consequence of all of that is that politicians have to spend so much of their time fundraising that they don't actually have time to actually, like, do the important thing that they're supposed to be working on, you know? Marianne Williamson, yes. Oh my God, how do you guys remember their names? Sarah Palin is, you know what? I don't think that Sarah Palin, in terms of how she performed, listen, I got to be careful about how I say these things, because number one, I'm about to say something that some people might disagree with. But number two, I'm saying something where I think my opinion here is, like, super nuanced. might be hard to pick up on. From what I can tell as a person, Sarah Palin is a little crazy. Okay. I think that the way that she was treated in John McCain's campaign was unfair. I think that they played the gotcha game with her, and she fell for it and made her look like a fool. And that in the public stage, she could probably hang if it had not been for, you know, her being John McCain's running mate. Okay. If she had been like, if that had never happened, and then like 4 years later she was running for president, or I think she probably would have held herself okay. But when you look at her personal life and a couple of other things that we've learned since then, I think that it is kind of like, probably is better that she wasn't. Well, I mean, she would have been okay as vice president. It would have been a huge deal, but whatever. Sarah Palin's an interesting one. But I'm telling you, the problem is not that it's a Republican or a Democrat. See, here's why that's the case, Kyle. The average voter thinks that what matters is the ideology of the person that I'm voting for, right? I want to vote for somebody that's believes that we need to be fiscally responsible and that we need to eliminate the debt. For instance, you say that, or you say, I want to vote for somebody that cares about people and will create safety nets for people. Okay. And you have like all of these, you have this whole world, the human brain, they want to digest the whole world into one singular philosophy, because that's the way that we work. We're religious by nature, essentially. Man, there was like a good breakout, and now new lows in the treasuries again. Haven't seen anything like super, like any news per se. It just seems like they're kind of turning over. Bank of England sells 750 million of 7 to 20 year gilts at a cover ratio of 1.35. May have been the selling. Maybe what's depressing the bonds. Okay. Anyways, so we want to digest, we want to create a dogma, essentially. The way that human nature works is we want to create a dogma and then believe that if our dogma was followed to the T, that everything would just work perfectly. Okay. The reality of the modern world is that the problems that we deal with are much more problems to deal with extremely complex systems. In other words, we have this issue where it wouldn't matter who you elected, and it wouldn't matter what their governing philosophy is. The problems of the system are so complicated that nobody can really navigate it. And the only way that you can solve that one is if you solve the system. It means that you have to make these smart little changes in here that kind of change the dynamics of the game. So right now, one of the dynamics of the game is that there is so much money being thrown around in politics that everybody can fundraise, but you really have to spend a ton of time fundraising in order to pay for anything. Like the cost of advertising is only going up. And when you look at the amount of media that has been spent, like this race between Lee and McMullen, I mean, it looks like Lee is going to win from the polling, at least. Pretty clearly he's going to win. But I get so much stuff. They are pouring so much money. They're paying so much money into that. Right? So that's a problem. So you have to change that. Maybe the Democrat system of, only publicly financed campaigns might help. I don't know. Problem is, how do you deal with like the small candidates and stuff like that? Okay, but that's one thing that would change. I think another thing that needs to change is the way that discourse on the internet happens. Like, I think that we made this mistake somewhere along the line where we said politics is important. Everybody should be involved in politics. Global, political intrigue, that's important. Everybody should be involved in that. And there was all of these things that came up, and they said that everybody should be involved in. And kind of what we're realizing is that some people just can't hack it. like some people are that's not their thing in life. Man, look at that big old offer at 24.5. Only fake traders care about this stuff. Full markets are no, Lucas. I don't know if you really want to. So I am a little bit more hands off today than normal because it's the first day after daylight savings time. So I usually don't find that good for trade. It does look like that the treasuries are swung down there, probably because of the action from the Bank of England, that they did their sell and they sold quite a bit. It's so for the last 10 minutes, it's been going down. And I saw that news come out 6 minutes ago. So I think that's our best explanation for why that's moving. So from that perspective, it's really unclear to me how much further it can go. But I don't think I'm going to jump on. Probably when I saw that headline, if I had realized that it was really going to be that big of a deal. I guess I know now next time this happens. But let's just, I'm just going to kind of take it easy. But here, it's relevant to trading. Okay. Why is it relevant to trading? Because again, it always tends to be a problem with systems, right? These are really complicated problems that, like, people want to come in and just like eyeball it and be like, oh, okay, here's the solution according to my dogma. It's not so simple. You have to be able to really analyze the system, and then you have to really analyze, okay, here's something that I can change about the system, that might change the dynamics of that. So we just talked about, I think that we've been in this problem for like 10 years now in politics. And there's one potential solution. So now what we'd have to do is we'd have to look at the effects of that and like really study it out, right? Okay. Well, it's the same thing in trading. Is we want to come in and we want to have some dogma about the way that the world works, and we want to trade off of that thing. Okay. There's support and resistance. There's levels where people will want to buy it, and there's people where people will want to sell it. And if I can identify those support and resistance zones on a chart, I can trade better. Okay. And the reality is the market's more complicated than that, right? And when we have a system that we're trading and it doesn't work, we're going to have to look a lot. Man, this is still going. We're going to have to look very deep to understand why that system has problems. I think that a lot of traders really over leverage themselves and take too much risk on per trade, and then they'll blow up all of a sudden and they'll say, oh, well, I didn't trade very well. When the reality is that the system that they were using is prone to doing that, right? If you want to argue with the support resistance follows, look no further than yeah. I mean, we made our video about price action. I think that's as far as we need to take that. Oh, did we finish the playlist? Bum, 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 ba-dum, ba-dum, bum, bum. I am so I think I understand why we got the selling that we did. But the problem with the trade off of that is what tells us that flow is going to be persistent, right? maybe there is some information in there if I knew a little bit more about what was going on in the UK and the process that they're using for that selling and everything. That maybe would make me think, oh, okay, like there's way more coming. But when I look at this at the moment and I kind of see something that could probably snap back and or just get stuck here really easily. Not to mention that I still don't think, I mean, it's been difficult action and then this kind of thing came out of nowhere. So I kind of have to assume that it will just go back to that difficult action. The S&P 500 is not really showing this, the same kind of activity, right? The S&P is kind of ignoring it. So that's why I'm really hesitant to try and put a trade on. I guess I could try and go for the reversal, but that's super risky right now. It seems like 4.19 would work. I might be able to get $10 off of it, but I'm gonna hold off here. Oh, okay. So what were you saying? This compressed. Anyways, why isn't there a tick compressed NQ DOM? Well, I have an ES compressed DOM up. I think that having a chart of the S&P 500 up instead of an NQ DOM is probably more beneficial to the stream. So, you know the cons of your own? Absolutely. So the big con of my strat is that it's discretionary and it's relying on your understanding and interpretation of the market. So if you are wrong, if you believe something that is not true, you misinterpret things, or you're a lot of time it seems like it's just like you miss something. You just don't understand. Like on the FOMC day, to me, nothing that they said out there was really surprising to me. But to a lot of people in the market that aren't, watching the treasuries as close as we do, what he was saying was very, very negative. Was very, very negative. And so I didn't understand how other people listening to that would react to it. And so I got that one wrong, right? And then you kind of have to rely on your understanding of the market, because there's always going to be stuff that kind of goes against you and makes it seem like, oh yeah, well, they're going to pressure me, but in the end it's going to go my way. Like every trade seems like it goes that way, right? As we get in and it's kind of difficult at first, and then it breaks and it really goes the direction that we thought it was going to all along. That happens all the time, right? So that's the big downside of it. And moreover, when we're relying on informational inefficiency, okay, there's a lot more edge and opportunity available with informational inefficiency, but informational inefficiency is not as reliable. Okay, so there's going to be wide variance in your returns, right? That's the con. That's the problem with it, per se. Okay, so that's a problem that can be overcome, but it's up to you, right? Compare that to a lot of other strategies where it's just the way that they're constructed, they're basically destined to fail because you're taking on too much risk, or you're trading off of something that like support and resistance. They think that it's a thing, but it's not actually a thing. In fact, support and resistance basically is contrary to like everything we've proven about the way that markets actually work. So that if anything, what we're really looking for is large meta orders, and those large meta orders are going to just blow right through your support and resistance zones. And the things that people think they're seeing in support and resistance are probably more likely to be related to correlations. It's actually a weird market right now. Yields are advancing. The dollar comes back. Is the dollar? Well, the dollar has kind of been rising during this one particular move, but equities are sideways. I feel like it's maybe too early to call equities, right? But I get how you feel. I mean, I say this all the time, right? Like here's the thing, okay? You're a market maker, nothing's going on. Absolutely nothing's going. There's no reason to trade, and you're the market maker. You know everything that's going on, and you know that there's no reason to trade. So what do? Do you just leave price where it is and just, you know, trail off, not do anything? No. Here's what you do. You move it around. You move it around, you get it to exactly the point that you think all of the retail traders are going to be like, oh, wait, something is happening. I think something is happening. And then as soon as they all jump in, and then you're going to turn it around against them, right? And you're just going to take the money away from those retail traders over and over and over again. I think that's what you're probably seeing here. In most of these markets, I haven't really seen a whole lot of real desire to trade. And the way that I kind of come to that conclusion is I'm just kind of watching the volume of it and how often it's ticking and everything. Like in the S&P 500, it's pretty slow this morning. The S&P 500 in particular is really slow. And the treasuries were very, very slow up until that downtrend that we had. And there was a reason for that downtrend. You get what I mean? But now that's happened, it looks like they've kind of reached the extent of their impact from that one particular meta order. So now, does that give them a reason to trade the rest of the day? I'm not so sure that it does. And so that's why I'm really concerned that it just goes back to the slog again, right? So it's all designed to look like there's something going on behind the scenes, but I'm not sure it actually is. And I got to tell you, it's a hard thing because sometimes I feel like there's something going on behind the scenes, and a lot of the time I'm right, yeah, but not always. A lot of the time I end up just taking a bunch of trades and a bunch of noise and being like, that was dumb. You know? Sometimes it's just, there's just kind of a feel to it. I think in this instance, I know because of it being daylight savings day, that's something that I've been able to pick on that I know makes the trade more difficult. So yeah. So I missed a comment from Tobias. There's too much personality going on in politics right now. No one is focusing on the agendas anymore. Well, that's always been politics, though. That's always been a problem in democracy. Certainly seems like the internet has kind of amped that up. Because ultimately, what I'm asking people to do is to vote for representatives based on their expertise on the matters at hand and their ability to navigate a complex issue and come up with a solid, well thought out, well researched policy response to that problem. And I'm asking people to trust the representatives that they've elected to do that and not sit and be a backseat driver. That's really what and I know that that's not what people want to do, right? Everybody wants to, if they did what I said they should be doing, then the world would be perfect. Or if they did what we were voting for, then the world would be fine. And I'm just telling you, that's not the world that we live in today anymore. Because the way that our systems are set up right now, it's like anything that's popular, it wins. And so all of the problems that would be solved by things being popular are largely already solved, right? It's those more complicated problems that are either too difficult for us to really figure out correctly, or there's something about it that makes the popular way be the wrong way, because it's exploiting some deficiency in human logic and our tendencies and stuff like that, right? Those are the problems. How do you overcome those problems? Well, that's why we have a representative democracy. And so there are some people that's their thing. That's their calling in life. That used to be me. It's not me as much anymore, but I certainly use it to my advantage in trading when I can. But we haven't been able to use it very much the last 2 years, have we? But some of them are totally plugged into the politics, know everything about every little issue that's coming on and all of the twists and turns and the political intrigue and all of that sort of stuff, right? But the reality is that not everybody should be like that, right? And we have to have people in those positions that we trust enough that they will give us a scoop when it actually matters, and that they're not just always constantly vying for clicks, right? And we have to trust we need to have a situation where the people that we put in office that we can trust to do their job as representatives, well, we voted for them instead of being backseat drivers. Can I read the official agenda somewhere for them? Yeah, you can actually. Each party has a party platform. But like, I you saying that kind of makes me think that you're missing the point. See, what Democrats and Republicans say they're going to do doesn't matter, generally speaking, if you put somebody competent in the job. Because the person that's competent, they're going to come in and they're going to do their job, and they're going to look at the thing well, and they're going to come up with a solution that's effective. And almost always that solution ends up being different from the ideological solution, right? So this happened with Barack Obama constantly, right? Barack Obama in the end was quite an effective executive, and he put the kibosh on a lot of things that liberals wanted to do, that the far left wanted to do. The far left did not actually like Obama that much. That was always kind of the weird conundrum about it, was that Republicans were saying that Obama is a far left radical, and then all of the far left radicals were like, no, he's not. He's a squish. He just does what the establishment wants. You know, he just does what the globalists. Well, you know why it turns out that way? Because when you have access to all of the information, it changes things, and the correct response becomes a lot more clear. And the person that you don't want in office is the person that, even when they get all of that information, they still want to do the political thing. Okay, that's what happened to Joe. That's what's happened with Joe Biden. Is they went in and they looked at everything that is, you know, all of the research and all of the information that he's going to be getting is going to be, hey, we're reeling towards an energy crisis, and this is going to be bad for the economy. And Joe Biden's and voters won't want to hear it. And so Joe Biden says, no, just hide it from them. Don't say anything, but we're going to get rid of fossil fuels until it gets to the point like last weekend, where he basically says, yeah, we're not going to drill anywhere anymore. We're stopping drilling, basically. That was the intent, right? Maybe they walked that back today. I bet you they walked that back today, right? But Joe Biden's problems are primarily problems because he was the one that stuck to the ideology instead of being the effective executive and finding the correct answer regardless, right? See what I mean? So finding out what their party, I mean, read the party platforms and pick which one you think fits you better. But really, there needs to be Democrats and there needs to be Republicans, right? So if you're a Democrat, I'm okay with some of you guys being Democrat, right? I don't come in and be, I think a lot of people think that it would be better if everybody thought more like me. I don't think that at all, right? This is an important attribute to have as a trader, I think, because what really brings the success? I see all these people, man, there's this guy that came into Discord. Do I tell you about this story yet? No, I did not. So somebody came into Discord over the weekend. So anytime that somebody comes in and starts up a little stir over the weekend, I'm immediately like, okay, probably don't want that. So the fact that they came in on the weekend is already kind of like, I'm already kind of against him in my book, because the people that come in over the weekend usually that means that they've become like hyper focused on something, right? And he's like he says he wants to make $50,000 a week from trading. He's like, I've already been making money, and he has like a 6-figure account, I think. But he wants to make $50,000 a week. And I'm like, like, unless you have like $10 million, that's probably not realistic. It's probably, you're off by like 2 orders of magnitude here, buddy. Right? He just didn't want to listen. I mean, it was, I could tell right away. Tobias saw this conversation. Yeah, I mean, I try and give you like my perspective on it, because what I did was I said, okay, so what I need to determine how much is actually realistic for you to make. I kind of need to know the actual size of the account, because I know that you're taking excessive risk from what you're telling me already. So I need to know what is the actual size of the account, so that I can, calculate what would be like a more realistic and safe amount of risk for you to take. And he wouldn't say. He refused to say. So I'm like, okay. He's one of these types, right? You're like the ultra aggressive bro, comes in, you're going to trade, you've had a little bit of success so far, and now you think you're going to shoot for the moon, right? Well, what's the problem with that? Okay. The super aggressive bro type, they usually do have some initial success, because being aggressive and taking on risk does pay, right? But what helps you keep those profits? What helps you keep those profits? Understanding what you don't know. Understanding this one simple fact: you cannot run the entire market by yourself. The market requires the collective action of everybody working together to come to an acceptable price. If it was one person, that's where you get communism. It doesn't work. No one person can know everything, right? We have to have a bunch of different people in the market that are experts at different certain types of things, different ways of trading and valuing prices and assets and things like, in order to have a well-functioning market. So we don't want everybody to trade like Seth, right? The reality is we need some people to trade that have no clue what they're doing and are just noise traders and are just taking on risk and making money thinking that they have a pattern, and they don't. And as many people as I can convince to be more of the informed trader, I think the better off the market will be. But we can't get all of them. Shouldn't be the case. We need a mix, right? We need a mix. And it's the same thing in politics. You understand, like, what you don't know. You can't have, if it was all Republicans, then nothing would ever change. We'd never progress as a society. If everything was always Democrats, we'd probably already collapse as a society already, right? So I don't want everybody to be Republican. I'm actually kind of happy with the country being pretty closely divided 50-50. But what I do want is, I want, when you're looking at your representative, to think less about their ideology and more about their ability to actually execute on the thing. So what I'm looking for is, what is their ability to be able to read a study and interpret the results of that study? What is their ability to look at it critically and say, here are the things that are maybe good about it, but here are things where they're probably wrong or that need to be researched more, right? They need to be able to understand, like, the limits of their knowledge to be able to come in and make good decisions, right? I want somebody that's an effective decision maker in there. I care more about that than I do their ideology, because the person that's the most dangerous, I'm telling you, is the person that throws their decision making, they throw decision making out the window and they replace it with ideology. That's the most dangerous one. You don't want that guy in office. Same in trading. You want this person, they have their ideology and they're 100% sure going through into he's going to blow the account. He's going to blow the account. It's a friend of mine who sent him over to your Discord. No, I hope that's not your. Well, like the thing that was really weird about it was that he was like, how do I take my account from here to here? But then he was kind of approaching it like he already thought he had it figured out, which I thought was kind of weird. And I do kind of suspect they're either narcissistic or lying, because you know, I basically kind of like, I don't care how big your account is, guys. I used to work for a bank where the number that I looked at every day and kept track of, because that was what my system was doing, was in the trillions. Okay. You come in and you have a 6-figure account, and I'm not necessarily impressed. I mean, sure, it's a bigger account than the one that I trade. I like to keep my risk minimum, okay? And if I was really like coming upon like a huge sum of money, I wouldn't be putting it all on futures. I'd probably put the majority of it in my IRA, okay? I'm just telling you, okay? Minimum risk, but the big numbers, they don't impress me. There's only one thing I care about. Can you tell me something about the market that you can prove is true? What can you prove is true about the market? That's the only thing that's valuable. That's the real capital for traders, right? So you can come in and tell us something provable, either through math or verified sources or whatever, something about the market, right? And if you've come in and you've like made money in the past, this is useless to me. That you've made money in the past means nothing, because past results are not indicative of future results. And especially if you've had phenomenal success, you've been trading for a year and you've already like doubled your account or something like that. What that means to me is that it's even less likely that you will continue to have good results in the future, right? Coming in and bragging about your past performance is like a huge negative in my view, because it means that you're having unreasonable amount of success. It makes it more likely that you were just lucky, right? It's extremely unlikely that you're going to come in and have that success like year after year after year. If you've done it for 5 years, then start a hedge fund and let me in. I'm getting my Series 65 here so I can invest in your hedge fund. I'm probably only going to put like a few thousand into it, okay? But let's start your fund. Let's do it. Or I'll get the certifications and I'll start the fund for you, okay? But because that's nuts. If you have 5 years, but I never come across that person. Never come across, because the person that comes in and gets those crazy results where they like double their account, what happens is then 6 months later they blow it. Tell me, can just open as well. We did have one person that did that. Rich? Are we talking about Rich that used to come here on stream all the time, or are we talking about somebody else? I don't know, Octavius. Like, we didn't have any recommendations. If we start an investment advisor company, or we start a fund of some sort, what would we call it? What would we call the fund? You know what? I do remember another Rich from Discord, but I don't remember anything about it. Probably you're gonna say, "Oh yeah, I remember that." Oh, that guy. Yes. He was doing quite well, but it was like in a very, he blew his account. Oh, jeez. So here's what makes me mad about that, Lucas. Here's what makes me mad. It's not that he blows his account. What makes me mad is he blows the account and then he doesn't think, oh man, Seth was right. I should come back and try and learn the thing that he was trying to tell me. You know what I mean? Like that's what. So it does happen to me. Okay, I've had some people where like they argued with me on Reddit or whatever, and then later on they blew their account and they're like, you know what, you were right. And like, I could totally understand if somebody at that point would say this isn't for me and just quit there, but really, like, here's the thing, is that this stuff, the things that I've learned are not something that I would ever come to an understanding of through intuitive logic. They're not. Like I said, the simple problems have been solved. And what's left are things that are really complicated systems, or there's something about it that our human nature causes us to come to the wrong conclusion. And so the only way that I've been able to figure this stuff out is, one, from losing for a really effing long time and just being frustrated for a really effing long time, and then reading the research and having to go like deeper and deeper and deeper, you know, because it was like, I felt like I had read everything about like trading and stuff, and then it came upon the market microstructure stuff. It was just like, oh my, how much time had I wasted on things that was just complete nonsense? And here it's like real research, right? And that's how I learned it. That's where it came from. I didn't figure it out. I'm not that smart. It took multiple very, very smart people 3 decades to figure this stuff out, right? And here we have the opportunity to learn about it and utilize it in our trading. And I can't guarantee that you're going to make money from it, but I think that it gives you a much better chance than otherwise, right? And for whatever reason, most people don't want to learn it. You guys do. I think that there's a lot of you guys that have gotten that book and decided that you want to learn about it as much as Seth can. And if you know what you're looking for, if you get that book and stuff, I think you can probably get on my level or higher pretty quickly. That's a crazy thing. There's probably somebody out there that's like a real math genius and is gonna like take the field further, and right? There's what we're doing here is important, because the problem is that too much of the market has become noise, and there's not enough people that are actually understand what's going on, right? So we need more people like that. But so it kind of frustrates me. Like, I can understand why a lot of people don't want to listen, because it's just contrary to what we want to believe. But what I don't get is why, when you've blown it and it's pretty well proven that you're wrong, that you don't go back and you know, learn the thing. Oh well. I mean, I don't, since I only look at market generated information and look at news only to avoid trading during those releases. Maybe. So one of the things, Lucas, is that I think that a lot of people that claim they're only looking at market generated information are actually doing a lot more interpretation of what they know about the markets subconsciously than they think they do. I think that with my mentor, that's a lot of what he was doing, because he was very much a just look at the chart sort of a thing, and he would look at the volume profiles and stuff like that. But it would always come back to, there'd be points where he would look at something and he would say, oh, you interpret it this way. And I'm like, well, that doesn't necessarily make sense. And then like, he knew stuff about the market that was going on. He didn't think that it mattered, but like the reality is that he loved the market enough that he knew what was going on. Like, he read all the news, he knew what was happening. And I kind of wonder if a lot of his success, you know, those situations where I felt like he was contradicting himself and then he ended up being right, was because he was subconsciously using that news information that he had, you know? Well, I don't know. He doesn't trade anymore. He took a shot, failed, and decided it wasn't for him and moved on. But like, that's the other problem with it, right? Is that until you've come in and you've traded, with a proper understanding of the market, like an empirical understanding of the market, how can you really decide if it's for you or not? Unless you know that, like, I really hate news and I don't understand the financial world and I don't care to, then sure, move on. But okay, so we are still heading down in the treasuries. Does look like there was at least another $10 in that. I am hearing stuff here on the news squawk where they're talking about the UK bonds. So it does sound to me like it is the Bank of England that is really, affecting this market. So I want to see if I can learn a little bit more about this, because this isn't just like a regular auction, is it? Slightest positive news is a reason to buy. Nope, I don't see anything there. This might be something that I might be able to find something about on Bloomberg. Well, so you just had something there that might create a liquidity hole again. There might be some more volume to come out, but not sure. I take into consideration the news. I look at the tape and figure out different structural strengths and weaknesses and try to go with them, but it's only by looking at the tape. Well, the other side of it would be, like, even if we confirmed that, like, you really knew nothing about the news and it wasn't affecting your decision making, we would still need to look at your results over a 5-year period. And I think here's the crazy thing is, like, I come in and I say, okay, so trade for 5 years, and then if you're still doing really well, then we start a fund, right? But there's a really good chance, like, of the people that actually get to that point, probably half of them, it was still just luck, like that can happen. You would have to look at, the overall stats of it to verify that there was really is like a consistent edge in what they were doing, right? But that's why, if you want to prove to me that something is an edge, you really need to take like an empirical approach to it, right? You don't necessarily have to have a study, but yeah, let me rephrase that. I always consider news about for things that will tilt the market into a very aggressive direction. So if it's a one-way market due to something, I probably avoid fading more, yeah? I think a lot of people, that's what they do. Yeah. I think I think the reality is that when something like non-farms payroll happens that morning, it affects the action so much that it's pretty hard to be a trader and not at some point want to know what that number is and pay attention to it, know it, and so forth, right? And you come in and you're like, well, I know it's non-farms and this is the direction that they went. So maybe I don't know the number and how to interpret that, but I know that the market took it a certain way, right? Right. But like, that's the thing, is that like when I talk about informational inefficiency, it's like it's plentiful and it's everywhere. Like, and it can be even the smallest piece of information that can be useful. Like, I think in this situation, knowing that it's the UK bonds is like maybe the only thing that you would need to know. I think that if I wasn't kind of risk adverse in general today anyways, yeah, I probably could have taken a trade just off of that and made 10 ticks easy peasy. Right? But the other thing that I'm saying is that if you really, really put your whole heart and soul into trying to understand the market and being up on the news as well as you can get into a mode where it's just like you're right almost every time. And when you win so much more than you lose. And there's so clear that there's an edge to it, right? Now, things will change. I think that over the last 2 weeks, things have changed, and I have not been as on top of things, you know, like a lot of the moves coming from the UK. That's one thing. And I don't know how to, I don't know how to get the edge on that, man. Because what I'm going to do is going to turn around and say, okay, next time that they're doing an auction like that, I should just be selling, but then maybe it will go differently, you know? So I need to know more, and I've never really had a super strong edge around the auctions anyways, right? Okay, well, here's a story from Bloomberg. This was way early. Okay, the UK bond market is bracing for 4 consecutive days of supply. In all, strategists see supply amounting to at least 11 billion. That could put the 10 to 15 year part of the gilt curve under some pressure. Under its quantitative easing program by 2:45 London time. And that would have been 7:45 our time, wasn't it? Where's my little calendar? London time. 2:45 is 7:45 my time. Okay. So now we know every 4 days. So for the next 3 days until the CPI, 9:45 Eastern time. That's when they're doing that. My modes are I know everything and then I know nothing and it repeats. It's exactly what it is, Octavius. That's exactly how it goes, I think, yeah. Is like when you get into that point of like, you know, everything that's going on, that probably means that there's about to be a shift that is gonna like be completely, you have no clue what it is. I mean, I've been able to, I think part of the reason why I've had success this year is that I was able to go to a point where like I understood what was going on like for 3 shifts, right? And it's only been until these most recent 2 that I've kind of been off. Because when it was the UK market, I was off, and now this more recent market, I'm a little bit like, Although I don't think that the current market regime has really asserted itself yet. Maybe after the CPI we'll really see, right? So I mean, again, it's like one of those pieces of news that like, depending on how that one turns out, it could go either way, right? And could just make or break the market. Okay, so we did get that kind of action that kind of slowed things down for a little bit, but they still look pretty heavy. So I think that there's a chance that we get a further slip that maybe then retraces back to this 21 area. Then we'll kind of have to see if it does the further slip, how much, if they build an even larger volume node. Because I do see a couple of things down below me that kind of make me think that there could be even more to come out here, right? I think that a person that's attracted to trading is going to be more likely to be headstrong and think they know everything, right? I think that's me. And the market is just had to slowly beat me into, in reality, you know nothing. You can know so much compared to everybody else, and even then you still know nothing. And it doesn't matter how much you ever learn, it's still going to be, the amount that you know is going to be trivial compared to everything else. Is that a world that you want to live in? So I don't think that's what people want, right? I don't think most people want to live in a world where it's a constant haze and you hardly know anything that's going on, right? But that's trading for you. Well, they're maybe trying, but it's awfully slow at the moment. Big yawn. It seems awfully slow at the moment. Elon Musk hardcore Democrats or Republicans never vote for the other side, so independent voters are the ones who actually decide who's in charge. I think it's more complicated than that. I think it's how effective are the hardcore Democrats or Republicans are at that time really influence the independent voters. I don't think that the independent voters are really so independent. I think that they're more influenceable. Does that kind of reflect my view on the world, I guess? You know why I think I kind of come to some of those conclusions is like, I always thought, and I guess maybe this was the way that I was taught, but I always thought that, you know, you're in complete control. You can come in at any one moment and decide I'm going to do this or I'm going to do this, and you can make yourself into anything at any time. And the why are we that way? Because we have free agency. That's the traditional Christian view of things, right? I have learned through sad personal experience that that is not the way that it works. Now, I didn't do anything too bad. Okay, wasn't anything crazy, but I'm ADHD, and I come in and what do I learn is that I can come in and want to remember to put the knife away so that the baby can't get to it, and I'm still gonna forget half the time, as hard as I try. And the only way that I can solve a problem like that is by designing a system. Like if I'm forgetting things, I have to put it in the phone because I'm not going to remember it on my own. I just can't. It's just the limits of my brain. And while you can change habits, it's difficult to do so, and you have to have systems to do so, right? And so you kind of come into this point where you kind of realize that, you know, there's all these things about it, the science about it, that kind of contradict what we thought we knew. Like, a lot of self-control is genetic. A lot of it is genetic. We don't have control over those things as much as we think. And it seems that there are some people that are like hardwired to either be progressive or conservative. Like, that's just the way it is. And it seems to me, just from watching this whole thing over the last, 16 years or so, people are easily influenced. And I think that if you don't think that you're easily influenced, if you think you're one of the people that are like, yeah, I'm not like those plebeians. I actually understand what's going on, and I already have my thinking about things is already resolved. And so I think you're fooling yourself. I think we're all more influenceable than we think. Right? Same with trading. Like, you can see it even with me. Like, as much as I avoid doing it, I totally come in and do technical analysis on it, right? Like, the brain just sees it. It can't help it. And there's Bloomberg picking up on the Twitter now asks some fired workers to please come back. I think that's a funny story. It's just, well, it's not just as a funny story, but I think it's a story that's probably going to have a big impact on the narrative going on over there at Twitter, right? So how much success did you have this year? So I was up like, so at the high of the portfolio, I was up like 30%. So I still trade it super conservative, okay? But with this new account, I've been more than paying for the fees every month, so I'm hitting my goals. I think it's, I mean, no, I mean, I want to sit down and say like, oh, I'm really confirmed that like I'm really on the ball now, and it's pretty consistent, and you know, no. It's been a volatile year in treasuries, so only paying fees. Well, yeah, but like I'm talking about like making 5 basis points a month. Think of it in terms of basis points. Making 5 basis points a month. So what would that come out to? .05 times 12 would be 6% per year. Yeah, that's about right on. That's actually really good. But because I'm trading micros, that ends up only being paying for fees, right? So when I feel ready, I can totally size up, right? But not yet. Not yet. You know, if for instance, things had gone differently and I had made $70 instead of lost $70 on FOMC day, then maybe I would be sizing up now at this point, but I'm assuming kind of risk per trade since I'm trading macros and I can't scalp them the way I really want. Yeah. You know, I think that part of the intention with micros is that, you know, you should be able to come in and kind of be a market maker to some extent, but it seems like that the way the robots work, that's just, it doesn't work out that way. That it's still, you end up having to be a speculator to really have an edge. Because you just can't get to the front of the line. Although occasionally I do get fills in the micros that are pretty good. A little bit of dinner coming. Guess I'm having a little bit of heartburn. Yeah, I understand the mini's counterpart to begin with. You can't. Well, you definitely have to watch the order flow in the other one, right? Like I really don't think. I think it'd be very, very difficult to only watch the order flow and have success. I mean, it's been done in the past, but I really think that the markets are incredibly statistically efficient and that the robots pulled most of that edge out. So I really think that you need more on top of that. But I at the same time, it always ends up becoming base. It's very rare, I think, that you come in and there's like a proven market behavior there, and then you know that market behavior gets arbitraged out of the market and now it's useless. I think that happens because a lot of those, let's say, properties, anything that's that consistent is probably due to the market microstructure. So what I'm really getting at is I'm questioning the claimed basis behind technical analysis, which is that people psychology doesn't change over time and they tend to do the same things over and over again, and you can see those patterns in the charts and follow the people's psychology. I think that's been well proven false. I think that the market adjusts to very, very well, and that what people do on an individual basis is actually quite random. It's actually quite random, in fact. And so trying to trade off of the psychology on a short-term trade doesn't really make sense. I think that you might be able to catch something to do with the psychology if you try and play the whole interest rate cycle. right? But that's like you're playing the game at like the highest level at that point, right? Have you had a time where you found a working system and then you lost confidence in it after some time, even if it was still working? Humans like, no. I've found times where it seemed like the system was working, but it was always that it always turned out to, as soon as I really wanted to go full bore with the system, it would start failing. It's not random, it's chaotic. I think it is random. I think that a lot of people's individual behavior is actually random. I think that, there's a lot of time in movies, there's all this thing where it's like, okay, we're going to get inside this person's head and we know what they're thinking, and then we can use that to predict what they're going to do. And I think that predicting any one individual's behavior in that kind of a manner is actually a lot more sophisticated than we think. Like, sure, there can be some things where, like, that's really their favorite thing or whatever the deal is, but especially in these complicated environments, I think trying to predict what any one individual is going to do is difficult. And I think that a lot of it is because while they may think that they're using logic and systems and everything to make decisions, the average person is not. The average person is just random, or whatever it is they're pulling that idea out of the ether from quantum mechanics and whatever. It's something that we really don't understand. But I digress. It's never the case that these sorts of things that they go away, because if it actually is a thing, it's probably because of the market microstructure. And that's definitely the case when it comes to like what the robots are doing. Is that the edge that they have is largely that they're at the front of the line and they can add and pull contracts very quickly based on what correlated assets are doing. And that's their edge. That'll never go away. There's only so many people that can actually make money from it, but that will never go away. There will always be somebody in the market doing that and making money from it, right? So, hence, especially in the treasuries, I think it'd be very, very difficult to trade without the order flow. So it's really both. You need something more than the order flow, but you need the order flow. Otherwise, you just don't understand what's going on. You just won't understand what's going on. If you don't like Twitter anymore, there is an awesome site called Masturbate Done. Oh, and Paul Krugman was trying to do Mastodon and hasn't been too happy with its performance. People made decisions randomly. I think you don't know what I mean by no. Well, I'll have to watch that real later, but I really so if you can use statistics on it, then it's not random, right? But like here again, they have a replication crisis in psychology, right? It seems to me that a lot of the psychology researchers don't understand the statistics enough to actually do real solid research. And there's a lot of research out there that's being peddled that is just absolute bullshit. Like I don't want to get too specific because then we're talking about things that, can get you in trouble and stuff. But I'm seeing professionals and policymakers make medical decisions that affect the entire country based on online surveys. Medical decisions that affect people's entire lives. And it's based on the most shoddy science I've ever seen. It's just absolutely crazy. And I don't think that's the only instance of that sort of stuff happening. I think it's happening all over the place. Of course, technical analysis can't be fit into a sample that presents statistical relevance, so it is random, but market volume and prices are not. So, like, this kind of comes down to what do you think is random? So, like, every order that gets placed into the market, somebody has a line of thinking that goes into it. There's very, very, very few people that are like flipping a coin and basing their orders based off of that, right? So from that perspective, it's not random. But from the perspective of, can you actually predict it? A lot of it is random. A lot of it is random. Right? See, I think what you're saying is when you say chaotic is you can say there can be a lot of variance in the particular thing, but at the end of the day, you should still come out with a certain statistical property of it. That's not what I'm saying at all. Right? I think that there are stylized behaviors of markets that come out that are different from a random walk. And so the behavior of the market, even though the flows come in, there's a lot of randomness to them. These behaviors will come out time and time again because of the market microstructure, right? And when you're finding something that does come out like that over and over again, it's going to be the case that it's almost always going to be the case that it's because of the market microstructure, right? The problem lies in people trying to solve the market by analyzing random event. Well, so no, like again, there's so much noise in the market that you want to come in and you want to say, okay, there was an FOMC meeting and it came out this way, so this is what the market thinks. And that's not necessarily true, because number one, there's so much flow that comes out during an event like that that is not related to the fundamentals at all. So again, it could just be random, right? And then number two, for the flow that's coming in that is quote unquote speculating, they could just be wrong, right? They could just be wrong. Yeah, stylized behaviors are a form of chaotic events. So a definition of a stylized behavior is actually a lot more general and generous than that. But yes, you should be able to find a statistical anomaly in it with a large enough samples, a collection of samples. But what I'm trying to say is beyond that. What I'm trying to say is that there is a large portion of flow that really truly is just random, and that the decision-making process of most retail traders really just ends up, when you take them all together, really just ends up being random. Really just ends up being random. And so what you're coming on to is that there's a certain bit of flow that's based on fundamentals. There's a certain bit of flow that's based on current positioning, right? And people that actually know what they're doing, okay? And then there's this whole swath of other stuff on top of it that's random, right? So in order to, why that matters is in order to have profitable trading, you end up having to be selective because of that. There's so much randomness that you don't want to just come into like normal action and just start trading and think that you're going to make money. The end result of all of that generally tends to be a wash. Like you make money in the short term and then in the end you blow the account, right? So that's why it matters. Is if there's so much of this is random, then you really do have to understand that like there's only so much that you know, and what you do know only tells you so much. So you have to be selective because of that. You have to be selective because of that. You have to be able to identify the situation where the particular stylized behavior that you know, or the particular driver of flow that you know, is going to be really, really strong and gives you a very, very high probability of predicting the outcome, right? You don't want something where it's like 55%. You want something where it's like 70% chance that you can be right. That doesn't mean that your win rate has to be 70% per se, okay? But like the winners that you do get, they better run, right? Yeah, it's time for me to go too. So I will see you guys. So today's stream is Daylight Savings Time Sucks. Good talk this morning. I will see you guys tomorrow in the meantime. And keep an eye out for that CPI, right? In the meantime, stay excellent, team.